ticks offside already. Do you know what I mean? I thought, I didn't really understand it. When normally it's not, is it? It's only one or two.
Yeah, the whole thing is that, and we'll go through it in a minute when we get more people come on, because the first thing we've done for about 3 weeks is you've got to take that risk on board. I noticed it very quickly. I went in very small in the FTSE. I did a pound, went up to about £5 a tick, and I went like, hang on, the spreads are really wide, and they are going to be foreseeable wide. And we'll probably start now, actually, and people coming in late, is that we've seen already IG, CMC, and a few others already widen their spreads. And the reason they're widening their spreads is that the liquidity in the markets obviously has shrunk, yeah? And they're aware, obviously, that people are losing money. And also, remember, when we're trading with IG, when we're trading with CMC, they are the other side of every trade. They have no interest whatsoever, yeah, in you making any money.
Of course they don't.
They're a broker. You wouldn't either. If you were in their situation, you would want to take the profit. So basically, if they're widening the spreads, they are losing money because the people who are hitting them are hitting them for the right reasons. And if we saw, for instance, coming on to say yesterday Wall Street, if they took the other side of those trades, I'll have to mute some of you people here because we're getting a bit noisy. So if you mute yourselves, it will help. There we go. Right. Hopefully you can all hear me. And we're going there, and I'll mute some of you because you can add some conversation in. So quickly, as we go into, I've just said to Si about the spread margins that are widening. So you've got to take that on board when you got your trades. The same thing, early morning spreads coming to the FTSE. We have seen the FTSE come down in the last 15 minutes from 6.3, 6.550 rather. It's come up almost 25 ticks.
My spreads haven't changed, Neil.
Well, I think they've narrowed in a bit from an hour. I mean, I've been in for almost an hour, and they're now down to 1.5.
Right.
Take it on board, yeah.
Yeah.
Especially with risk, because I said this before, we know that, and I'll go through it again because a few people were breaking a few rules yesterday. If you've got a £100 account, yeah, the most you should be losing a day is £3. I know that sounds stupid. Equate it to £1,000, 30 quid. Yeah, we have the most ridiculous things. 2 or 3 people who knew came on yesterday. They were happy to be 10, 20, 25% off their account. They thought nothing wrong with that. You know, we very much advocate educated trade that you want to be trading not just next week, not this next month, but possibly 2022. Yeah, so you've got to bear that in mind, especially early in the morning. You think, oh, let that run a bit. If you've got a £1,000 account and all of a sudden you're 60 quid offside, that's you blowing out for the day. I know with George, I spoke to you before, you've got to take that risk on board. And if you blow your risk out for the day, say you've got £50 on your limit and you blow £30 within the first 10, 15 minutes of trading, you're a fool to yourself. Yeah. So therefore you've got to trade within your account. If you've got a £1 million account, slightly different. Yeah. £1,000 account, £10,000 account, you work accordingly. The whole point is to build your account. You know, so we never risk more than 3% in a day's trade. That's not one trade, that's the whole day. That's the lesson we learned from this morning. Quickly going forward to what we've got coming out this morning, which we always try and do because we've got 5 minutes before we go rushing over. And I'm going to be looking at the FTSE this morning, so we'll whisk that in there in a minute, and I'll share the screen. What we do have is the Myrtle's meeting today about the lockdown. That's due out before 9:30, so a heads up for that. Those of you who haven't got Trader Made, we're giving it out, obviously. You should all have it now, Educator Trade, because it's free, and you should have your news server up the whole time. On the discussion group, we've got James, May, Harry, and a few of the others, obviously putting everything on there, which thank you very much for doing so. Go's coming already and said the lockdown's going to be to at least half term, which I think Jordan said, alluded to, is February the 15th. So nothing coming in there. Going on to the Japanese, they're going to issue a state of emergency. I know that sounds quite drastic, but that won't come until Thursday. We've got 2 days to go there, so we don't have to really worry about that. And that will be a state of emergency in Tokyo only. Okay, so these are all things you should know about before you come into the 8 o'clock opening. And if you don't, ask yourself why. Yeah. So quickly going through the Georgia election, which everyone says is the most important thing on the agenda this week. I totally agree with that. As we watch the FTSE come down lower, yeah, is that the Georgia election, yeah, in the US election in November the 4th, if you remember, it took 3 days for them to do their count. Yeah, they also had 2 recounts. The reason you can have 2 recounts is that if it's in between 0.5%. Biden, there was 5 million people voted in Georgia. Biden won by less than 12,000 votes. Yeah, and you can see the importance already. They say whoever they win, the Republican wins, whatever, there'll be more stimulus coming through. If the Democrats come in, obviously more taxes and everything else coming through. Therefore, the Secretary of State can also step inside if he thinks there's been irregularities. I was hoping for Corey to come on from Florida to see what goes on, because obviously he's seen it before. They've already processed 1 million mail ballots already. So therefore, the rumours that are coming in is that they reckon it could take 3 to 4 days for the eventual vote to come in. So rather than we start panicking and saying why Wall Street came out yesterday, obviously because of the recount or because of what could happen, I don't think we'll see that result today or tomorrow. Okay, so that's on the agenda, but we can put that to the back burner and go back to what we're going to see on the screen. So I'm going to whack up, hopefully you can see that. I've got FTSE up here, and I've got on a minute chart. We're looking at FTSE because obviously on the news this morning, we have had all the news on Sky about lockdown in the UK and how bad it's going to be and how it's going to carry on until maybe February the 15th or indeed April the 4th, which is the start of Easter. These are all dates that you can look on your trader made thing and see where we are. We're going to come into it. We've got 2 minutes to go. I'm looking at FTSE. Those of you who are new to the opening, scalping anything else, I'm going to scalp today. Yesterday, pardon me, I'm just recovering from COVID. So I'm going to be trading the FTSE tightly. So I'm going to have like a 4 or 5 tick stop, but I'm not going to put the stop in the system. I'm going to work the stop on my mouse. If you're trading, as I did yesterday, I went long yesterday, obviously the big buyer, I had a 20, 30 tick stop and I moved my stop up accordingly. If you're scalping, a 30 tick stop in a FTSE is too much. In the Dow Jones, fine. In DAX, probably fine. Yeah, because we're bigger margins and obviously we expect the DAX to move probably 70, 80, 90 ticks in the first 15 minutes of trading. Scalping the FTSE coming in here, I may go long, I may go short. The whole thing about it in the next minute or so is I always look for price action to come in. Those of you who are new, and that's why we do the early morning Zoom, we wait for the price action. As you see, I've got a minute chart here. Some people might want to whack it onto a 5 minutes. You want to be a bit more sedate, and you see the camera's more obviously there. I'm going to put it on. I'm going to put it on 5 minutes because it's easy for people to see. Hopefully, you can all see that. If you can't see it, I don't know what I'm going to do, but it should be fairly clear on there. I'm just going to admit a few more people onto the screen that's come in there. So what we see is price action. The reason why it is price action is that on the 8 o'clock opening, the 2:30 Wall Street opening, the 4:30 close, and the 9 p.m. close, people react accordingly. They use buy orders, sell orders. Yeah, they're all market orders. Yeah, they're not at a price. Yeah, they just want to buy the opening or sell the opening. And we can see very clearly here the FTSE just jumped 10 ticks. That may be just 10, 12 people wanting to buy. 15 ticks, 16 ticks. Yeah, this is why we come in at 8 in the morning to see the reactions here. And it will be really fast. Yeah. Now, I've got it on a 5 minute chart. Now, if you whack that down to really, if you want to be on a crack cocaine or whatever you see, that is scary. Yeah, from 8 o'clock to 8:01. We have basically had almost a 20 tick rally. Yeah, that is just so people coming in, buying the opening, and obviously because we have lockdown, people aren't going into work, and people aren't trading the dealing rooms, everything else. People are waiting to see what's going on. Yeah?
Did anyone have that? I had 80 quid there.
What did you? I mean, it's great to see that price action come in. I actually had the wrong. My mouse was on the wrong side. I'm left-handed. My mouse was on the right hand, which is ridiculous. I now realise that my right hand is redundant to come in, but that price action of FTSE you can see now, that was as Simon said, that was almost a 10, 15 tick winner.
That's all it was. I think I had, Neil. I had 34 opening, go to 34. Yeah, I had 10 ticks.
Well, 10 ticks, and that's when we're scalping. I mean, in theory, you can look back at that and say, oh, if I waited another 10 seconds, I could have made 20 ticks. When we're scalping, we're not worried about that extra 10, 20 ticks. If we were trading now and you went long at the 8 o'clock opening, we go back to the opening here. It seems ages ago. 6.525, I think. What price did you buy at?
34.
And you were a bit slow then, really.
I was.
The theory, therefore, in the space of a minute, we have seen the FTSE rally 35 ticks. Yeah?
Yeah.
This is how volatile the markets are becoming on the opening. So therefore, so the price action has told us, even though before 8 o'clock, the market looked a crock of shite. Yeah? The DAX looked a crock of shite. And all of a sudden, we've seen a massive rally. Now, if we go onto the market profile, those of you who understand the market profile, you go onto TraderMate, it's on there. That would be the letter Q from 7:30 to 8, or sorry, 8 to 8:30, pardon me. It's a letter Q. Yeah, and you would have seen that Q would go every tick up. There'd be there'd be 40 Qs, yeah, on that market profile chart. Yeah. The same thing now is that now the market sort of tends to wake up and the market makes start to say, oh, let's put our boot in, let's see what's really there, let's see if there's any liquidity in the market. And basically what it showed me was that no one really wanted to trade at 8 o'clock. Yeah, all you saw was 4 or 5 people who piled in to buy it. And remember, the FTSE had a fairly good day yesterday. First day of the year was up 2.5% by midday yesterday. Yeah, so the great thing of coming in to our 750 Zoom, which we're going to try and do every day now. Hopefully, as long as it doesn't snow too much, and get in here. But those are the opportunities that we know as day traders, that we know that people will come in with their order to either buy at market or sell at market. The buy market could be a buy stop, yeah. And the same thing, had the market been really wobbly and say Wall Street or Asia or Nikkei and everything else, say was 1, 2, 3% off, those stops will come in. Those of you who understand stops, fantastic. However, those stops on the cash market can't get triggered, yeah, until 8 a.m. When 8 a.m. opens, the computer will say the FTSE is now trading 6,560. If your stop is to buy at 70 or sell it at 50 or 70, that stop gets triggered. It can't get triggered before 8 a.m. That's why we always get this mass movement, yeah? Yeah. So interesting, straight away, obviously I've got the 10-second candle. I thought it's a bit fast. Yeah, we have seen almost a 0.5% move in the FTSE in 3 minutes of trading. Yeah, wow. Yeah, that's why we come in at 8 o'clock. Yeah, that's why we wait there, because we never say at Educator to trade. There's easy money on the table. Yesterday morning was easy money. 2:30 was easy money. And in theory, if I didn't buy it, the price action was there. I was fairly bearish. I wanted to sell it. There was no reason whatsoever, if you're scalping, to sell that FTSE this morning. If you did sell it, I don't know what you saw, because all you saw there was buying. So I saw it, got on it, nicked 80 quid, 10 out of 10. Yeah. The whole thing's that when you are scalping, as I said, just before 8 o'clock, you've got to come in with the most neutral mind possible. The FTSE in the next hour could be 50 points off. We're here to trade the opening here. We're here to abuse what people have put in the market at 8 o'clock. Yeah. And for anyone who did go short, there was no reason on that chart, on the price action, to be short. Zero. Yeah. And if you did go short, come on and tell us why, because to me, that's gambling. That's not trading. And if we put it on, and if you look back on it, let's do what all technical traders do. Let's have a look at the chart now, see what you've done. And you would have said, oh, look at that chart here from 8 o'clock. Basically, the side said, here's a candle here, 8 o'clock, 30, he said 34. Basically, in a space of 5 minutes, we've seen 42 ticks. Yeah, that could have been your trade of the day. And that's on a 5-minute chart. Yeah, there was zero reason on being short on there at all. I think if you just go a bit further, some people like 15-minute charts from 8 o'clock. Even on that candle or any line whatsoever, there was zero reason to have sold it yet. Does that make sense? And that's what we're looking at, price action. Yeah. Yeah, and that's when you come in and people say, oh, you know, if people walk in at 8:15, 8:30. That's why we're getting at 7:50. We'll wait for that. Bit of a shock to me. I didn't think there'd be that much buying there. Yesterday we expected it. It came in there. So we know now that a lot of the fairly fresh day trades have all gone long. So we're looking at market profile, or if we're looking at a point of control, we'll put that on a bit later. The point of control in the, I'm looking at it here, in so much in the FTSE as such, if I can find it on the chart and I'll whack it on the other chart.
Neil,
I haven't been on my screen for so long, I've forgotten what some of the code. What's the FTSE? UK 100.
UK 100.
Thank you very much.
Neil, have they got market profile on IG?
No, well, very good question. We are currently, in negotiation with them last week and this week. And what they're going to do is either put market profile on, because if you're with our group, Educate to Trade, and most of you are, and we try to manage your risk. In size cases, we try and tell them to stop trading 100 times a day, things like that. But what we're going to do is try and add a system called Evo, which is a virtual trading system within our own membership. Because you allow us to look at your risk and your data, we can therefore use that system within our group. And you obviously have to say that we can. And therefore, so what you will see then is that when SI went long at 65.30, a little green candle would have gone up with a mnemonic or badge to say that someone within the Educate to Trade group has bought FTSE. Or if someone who was stupid enough to sell it would have come in and said he sold it there and therefore would he got out and stopped. So it's like a virtual pit. So we're working on that, which I think hopefully will be done this week. I've got a meeting at 9 o'clock. So that's what's going to come on for us within IG. Yeah. But if you want it, the only rule behind it is we're going to work out how much it's going to cost. I don't think it'll be a lot of money, but also you have to accept that if you want to see other people's trades, they have to see your trades. And added to that, therefore you have to trade. Does that make sense?
Yeah.
Those are the rules that we're trying to work out later on today, and I think that will help us a lot. So I'm going to try and go 5 and see if we can see the FTSE. If we can, there we can stop the share there and share the screen. Right, can we see that screen?
Yes.
So this is the FTSE value here. Obviously, we said on the Q, the value low. Actually, you said 34, didn't you, Si? 6534.
Yeah.
On Q here, I think here, maybe this is a bit slow. Obviously, it's trader made and data's a bit slow there. They're probably saying 37 you could have got in. If we look at the Q here, that everyone's new. Q is the letter print, and all the letter prints are a time print half hour. So O was obviously 7 to 7:30, P 7:30 to 8, and Q here obviously we opened a bit lower than here, I thought. Yeah. Right. So basically from Q, we've basically gone straight up to where we are almost now. So those of you who like market pro, and I swear by it, there's something I was taught many moons ago, is that would have kept you in your trade alone. Yeah. The issue as size pointed out and George pointed out, it is slightly too slow at the moment for scalping. And the reason behind that is that IG get their data from somewhere else as well. Yeah. So those of you who can see that screen, you see on the Q, obviously in 20 minutes time will become an R. Yeah. And so in theory here, if you were long, the price action would have told you to go long, and side did go long. In theory, it's telling you here you should still be long.
Yeah, you should have stayed in, yeah.
Yeah, you know that. Those of you who don't understand what POC is a very simple point of control. It's here that if the FTSE gets down to 59, it's currently almost 6 the figure, there's no need to really go short, yeah, until we break this level. And I said to you before here, anyone who has gone short, why? There is zero reason to be short, apart from your gambling addictions or your mentality to think, well, they're going to shut down the hairdressers or barbers and everything else. The fact of the market here is that the FTSE is, even as we look now, it's flying. Yeah.
So would you wait till like till once it breaks the 6,600 mark again.
Well, now, very good question. You go back to your charts. You go back to where you would have thought a reasonable resistance was.
Well, it's just broken it
on an hour chart now, and I'd probably say if I was going to go short here, to me, I wouldn't go short down until 6:45.
Right.
You know, if we we go back to we got a chart here. One day I'll be able to work these charts out really well, you know, and that'll be quite simple. But not today. So can you see the FTSE chart here?
Yeah.
Up its level here. You know, when you do the educated trade courses, we look at 3 resistance lines, 3 support lines. To me, there is nothing really. I wouldn't count that as a resistance line up here. What's this, 1, 2, 3 here? That would be my next port of call if I wanted to be short.
Yeah.
And it's the same thing, though. You go back to the if we go back to the market profile on the FTSE as such. Where we can you see the market? Are we back to the market profile? Hopefully.
Yeah.
And where did we say 6,645? Well,
yeah.
No shock here. We go back to yesterday's market profile, 6,643, 45. That, in theory, you can see the battleground there. I mean, we've had at a 6, 37, 39, 41, 43, 12, 12, 12, 12. That's how we kind of hit that level or rallied or retraced. Yeah. So immediately, I just look back there and thinking, well, there's no point going short until then.
Right.
Alternatively, if you're the top trader, you're thinking that's where I might get out my longs. And I mean that'll be 120 ticks.
Yeah.
Wow. You know, and we're 13 minutes into the hour. Yeah. So that's why we try and come into our 8 o'clock opening and everything else and look into it. So hopefully that helps. And we looked at the FTSE. So my view was that although I was bearish, the price action, the market profile, all of that stopped me being bearish because there was no need to be bearish. Yeah. So the whole point, you come in and review because we do our homework, the emails we send out, everything else. However, the market has dictated at 8 o'clock. Why didn't it do it? Why did this rally happen at 7 o'clock, 7:30? It doesn't, because the cash markets open at 8 o'clock. That's when the big boys come in. Yeah. And you know, I don't know, you know, we go on to those candles on the we go into those candles on the FTSE. I mean, that is clear as daylight from 8 o'clock.
Yeah.
You know, that green candle there, you would see at a cathedral. Yeah, that's not a small candle. Yeah, I know that's an hour. You know, let's be really cruel and we've all missed it while we didn't go long. There is not a red candle in sight. Yeah. So the argument being there is that we should have been long. I didn't trade.
No, I didn't trade. I mean, I was fairly bearish this morning anyway, so
you're in the same boat as me. However, we said before, by you not trading and going short, you have saved yourself pounds.
Yeah.
Because whatever happened there, you'd have been stopped out probably twice.
Mm.
Yeah. And this is what we went before. This is where you manage your risk. Yeah. You might find it a bit hard at the moment. You're thinking, why is the FTSE up? You know, again, as you watch it now, it's running another, 5, 10 ticks. Yeah. You can look at it as a missed opportunity, but you save yourself money because we buy things, we sell things, or we don't trade.
Yeah.
You understand that even though your view was bearish a month ago, so 2 months ago before you joined Educator Trade, you would have gone short.
Yeah.
You would have done dough. Yeah. Simon's point of view, great scalp, because all it was a scalp. And you don't look back at it and say, well, Si would have held his breath or counted to 220 or waited 5 minutes. He would have made not 80 quid, but probably 300 quid. Yeah. That is also totally immaterial because Si entered that trade as a scalp. Yesterday, he entered it as a trade. He would have put his 30-tick stop in there. Yeah. And he would have made his £300.
Yeah.
Yeah. 2 totally different trades. And you ask Si, when you put that trade on Si, were you scalping or trading?
Scalping, mate. Listen, my view on that, mate, is because I always get a rough figure made. I normally go around about the £50 mark for a scalp, like personally, just for my own figures. Because if it hits that, because you can hit £50 and you can drop £100 in seconds, you know. So if as soon as I passed that £50 barrier, I mean it shot straight to seven. I think it was like £78. I think as soon as it hit that, the button was gone. You know what I mean?
Yeah.
I'm out.
And
Neil,
quickly, the one lesson I want to come from that, and hopefully Sol will come in, yeah, because this is like community Zoom. So I went long before 8 o'clock on the retail sales. You mentioned it, Peter, in earlier, yeah, why he went long, yeah. So although wind the clock on 50 minutes, his view was right, yeah, the timing was totally and utterly wrong.
Yes.
Yeah. Had you gone along the DAX at 8 o'clock, you'd now.
If I'd had that same trade, I'd be 400 quid up.
Yeah. So this is the point of view: is that your timing and the reasons why we trade, and the reasons why we associate 8 o'clock as an important time to trade. All right, a lot of people having their breakfast and what you're eating there, size.
Sorry, mate.
Should do an advert. Yeah. Well, you made 80 quid. You deserve your breakfast. So that's why our times are so important. Yeah.
I've just been stung too many times before 8 o'clock. I think, you know, the view's always been right. The trade's always been right. But before 8 o'clock, I've been stopped out. And after 8 o'clock, you know, I would have made a lot of money.
That's the lesson learned, Jordan, isn't it? Same as what I've just done.
So I said, although the lesson learned, you didn't go long, Jordan, this morning, you saved yourself 50 quid.
Yeah.
Neil.
That's exactly the same thing. Yeah. And so that one of the reasons why this morning was because I was fairly bearish. I didn't go short. I waited for that price action, which had time to come in. And the only thing that came in quickly, who were neutral, would have been to be
1 minute.
All right.
Number 2.
Okay. So right. We'll probably do another Zoom at 2:25.
Neil, can you hear me?
Yes.
Just a quick one.
Yes.
I was obviously long from yesterday.
Yeah.
And obviously after it come off on the Dow. But do you know what I've been noticing a lot? Before the open, so the rally will be continuing, and then before the open, it comes off. On the open, it comes off, but then it continues to rally. Is that profit taking?
That's a very good question, and that's why we look at the price action. Because I said,
because I get caught out a lot. I do. I get caught out a lot.
You get caught out a lot, but you have to be aware of why the market moves. And the reason, why didn't the market move at 7:45? Why didn't it move like 10 to 8? Because 8 o'clock, the cash market's open. You have to give respect to why the London Stock Exchange.
Do you think you're probably better off if you're in a profitable position prior to the open, taking the profit and letting the open and then getting back in?
Yes, totally agree.
Yeah.
The same thing that if we got to figure out what are we going out today, today, if you look at if we do our homework today, we've got Wall Street at 2:30, but the big figure of the day will be the US ISM manufacturing PMI.
Yeah.
And we know PMIs are fairly okay. And what are we looking at? 58.5. And look at the screen up here. You know where the screen is, Charlie. And last month was 57.5. So a lot of people may get in at Wall Street at 2:30, but may wait till 3 o'clock.
Yeah.
So
you're better off letting that all happen.
Yeah,
because this is the problem which I'm facing. I keep holding positions through data and holding positions through opens, and you're competing with all these big moves. And obviously, if you're in a decent position, 100 ticks is like a lot, you know. I think that's what's happening quite a lot because.
Well, I think it's two views here. Is that at 8 o'clock, and Si's point of view, he scalped it, made money. Your point of view is that you're trading, I'd say, more not minutely, not even hourly. Your view is probably over 2, 3, 4 hours. Yeah. And that's a different stage of day trading. I wouldn't say there's something wrong with it, the right of it, but you're looking at a different angle, whereas other people who are coming at 8 o'clock are looking to nick 20, 30, 40, 50 ticks. Say in the FTSE this morning, you could have nicked 60 ticks. Nothing wrong with that. The same, you know that at Wall Street at 2:30, if you want to scalp Wall Street, you're looking at a minimum of, let's be honest about this, say 70 to 100 ticks. You just mentioned it. Between 2:30 and 2:35, you know the Wall Street's going to move 70 to 100 ticks. And people say, well, that's mad. Why? Well, partly because 302 ticks is 1%.
Yeah.
100 ticks is nothing. And we know that. I mean, we know the spread in Wall Street at 230 isn't 1 tick, isn't 2 ticks. It's probably, was it a bidding off a 10 tick spread?
I do think after doing it as much as I have been, I think getting in and out and just nicking your money when it's there is the only way forward, because the amount of times I've got 500 quid, £1,000, £2,000 sitting there, I don't take it, I get stopped out at break even or even at a loss, only to get back in a trade to do it again, when if you was just to nick the grands, it just all adds up. Because I think you've got to be a certain type of trader to be able to do the swing trading. I just don't think.
I think it's a double-edged sword, that as well, though, really, because I'm guilty of nicking it straight away, and then could have ran it a lot further. So it's a bit.
Yeah, but you're never going to go broke or blow an account up taking a profit. Do you know what I mean?
No, that's true. Yeah,
that's the problem. Like you will lose money holding on to it, being married to a trade, and that's what I find a lot.
Is that both of you two have learned the hard way, obviously doing the one-to-ones with us, but everything else, is that you manage your risk now. Whereas 2, 3, 4 months ago, you would have thought, I'm 5-10% down, who cares? And you know that now, it makes no sense. You might as well go down to the casino and have a punt, yeah? And the same thing, when you come in, they're saying to charge you roughly know what's a good day to you, what you're happy to make. The same things we said before, where we're quite strict, saying we've got a stop of a 50 quid, £100, £1,000, £2,000, whatever those stops are, that's to your account. Whether it's 2%, 3%, it's fine. The same thing, and I said to you, Charlie, time and time again, and probably tell you time and time again, that's what we're here for, with the risk management and everything else, is that you have to be happy sometimes with what you're going to walk away with. Yeah. And you have to have that mind on board. Of course, we'd always like to make our best day ever, every day, but we know that doesn't happen.
It's not that. I just think like what you've said to me before, just rob, borrow and steal, innit? Just get what you can when it's there, take it. And I'm not being funny. You go and do 2 or 3 good trades a day when you're just taking it. You've had a good day, rather than trying to get that one trade where you've had your good days. Just especially in these market conditions, you know, the VIX is low and it's the ranges. I know yesterday, but yesterday was very far few in between, wasn't it, really? So to go and get these sort of ranges, you're better off just getting in and out. And
And it's start of the year, so we take that on board and we build our accounts. I mean, I said to people yesterday, had a very good day. People had their best day yesterday than they had the whole of December, so to speak, which is great. So therefore, some people turn around and said they won't be trading the rest of the week because they made their week's money. And there's nothing wrong with that. Yeah. However, even though when you look at your calendar, you should have all done your calendar by now. And we look at, what do we say? Today we've got the ISM. We look at tomorrow, Wednesday, we've got China PMI, French PMI, German PMI, Europe PMI, UK PMI, ADP out, US PMI, and obviously non-farm payroll on Friday. And by Friday, we should also know who's won the Georgia election. So we are aware what's coming onto the calendar. And also we've got to be aware of, obviously, this afternoon of Myrtle coming out saying that Germany may go into lockdown. So the same thing as Charlie said, it's very hard to marry yourself to anything because some news could come out now between now and 9:30, and that 100-tick rally in the FTSE could be wiped out.
Neil, see, for example, like different markets, like for example, the FTSE, they've got different sort of like common ranges. So like, for example, 100 ticks on the FTSE is quite a lot. Is that correct? Whereas like the Dow, if you've got 100 ticks on the Dow or whatever, that's obviously like a sort of a common ground for a good trade. Do you know what I mean?
I think you've learned that, yeah. I mean, the same thing you've learned at the DAX. As I said, you don't scout the Wall Street for 20 ticks.
That's it.
You don't scout the FTSE, the DAX for 20, 30 ticks.
No.
You're going to go bigger.
Because they're a lot more volatile. Do you know what I mean? They range a lot higher.
On the simple fact, the Wall Street is trading 30,000, the DAX is trading, say, 14,000, and the FTSE is trading 6,500.
Yeah.
So obviously, 1% in the FTSE's 66 ticks, 1% in the Wall Street, 300 ticks.
Yeah.
That's common sense, yeah? You work according with that. So the same thing is that if you've only got a small account, and this is we've got a lot of new people come in, we don't advise you to trade Wall Street. We don't advise you to trade the DAX because it's too fast, it's too brutal, and your risk management comes into question every time. Hence, that's why people are new. You've all done it before it come in. You've all gone to Eurostocks.
Yeah, that's right.
Eurostocks is like a fifth of the DAX. If you're trading, if you want to do it on a simulator, do 5 Eurostocks to 1 DAX. And I bet you it works out. Buy 5 Eurostocks, sell 1 DAX, or vice versa, and your account will not move. Yeah. So the same thing, horses for courses for what we trade. The same thing with a lot of people who come in who are new, and you've all come in there. The one thing in common where people have lost their money before, who have come into especially educate trade, they've lost it on the FX, because the FX is sometimes very volatile. It's very hard where you put your stops, and obviously the FX is sometimes more extreme to news, as we've seen on Brexit and as we've seen on a few other things with the British pound in the last 3 months. All right, gents, we'll come back at 2:25.
Cheers, mate.
If you want to go onto the email list that we send out every day, very kind of James May of Archers sends the missions out, and a few other people. We mix them up and put them out together. That helps you, and we try and get that out before 7:30 every morning. All right, okay. Have a good day, and see you at 2:25.
See you later, Neil.
Nice one. Thanks, Neil.
Thank you, Neil.